Welcome, AirDNA data nerds. I'm Mariah Kamei, VP of Marketing over here at AirDNA. And I am joined today by my faithful sidekick. Actually, I'm his sidekick. He's the main event, Jamie Lane, VP of Research. Jamie, happy spring. Almost happy birthday. Shout out to Jamie. His birthday's on Thursday, guys. Shameless birthday plug.
Thanks, Mariah.
All right, well, we are here to talk a little bit about what happened last month and what to potentially expect in the future here for all things short-term rental. So Jamie's big headline, it looks like in this recent market review you just did, occupancy is down. Okay. How much should I be panicking? Should I be worried about demand right now? What's going on?
I would say no. But it depends on where you're at. So the consultant in me wants to say it depends. But overall, no, you shouldn't be worried. Occupancy is falling for the right reasons. If you'd read our outlook report from late last year, the big headline there is that we expected occupancy to decline in 2022. So this is sort of following along the track, and it's actually pretty healthy given how strong demand was last year and how strong demand still is. Like, we're talking about occupancy falling, but demand was up 25% versus last year.
Right.
So yeah, occupancy fell 0.3%. The number of available listings was slightly higher. So this definitely is a supply side story of the industry so healthy. There's so many more hosts bringing supply in. And as an industry, we're supply constrained right now. Airbnb said they need 2 or 3 million new hosts coming in over the next few years to support all the demand that's coming in. And fortunately, we see supply coming in, but the demand sort of is matching it. So if we were talking about occupancy declines of 3, 4, 5, 6%, I might tell you to start panicking, but we're not anywhere close to that.
I love that. So don't hit the panic button yet, but still so much space to get in on short-term rentals, of course. And yeah, when you talk about 2 to 3 million more hosts needed just to meet the needs of Airbnb alone, I think there's lots of white space for folks. And it sounds like we're just kind of getting to a nice, healthy, sort of balancing out of the industry.
Yeah, and some of the markets that saw actually demand decline this month versus last year, and it was some mountain resorts like Big Bear, the Poconos, Lower Hudson Valley that had seen really abnormally high demand because of COVID restrictions, people wanting to get out of the city, spend time in the mountains. It's not a typical high season for those type of areas. It's sort of in between snow season, not sort of getting into spring and summer. So nothing to really worry about there. What actually got me excited this month, do you want to hear that part?
Yes, if it's exciting you, it's got to be exciting.
So there's 3 big cities that sort of led occupancy growth as Washington, D.C., Boston, and New York.
Okay.
In New York, occupancy was actually up 25%.
Wow.
On the back of demand growth of 59%. So that's pretty great. But don't get too excited because New York is not back. Demand's still off about 45% from pre-COVID levels. So it has a long way to go. We're building off of a really low base of demand, but 59% growth in demand is good.
I like that. And it's one of my favorite cities. So hopefully we can get that back, mostly so that the restaurant businesses can come back, because that's the best place to eat in the world, I think, in my personal opinion. So I love sort of like thinking about it from that macro level, but then like when we get down to sort of like things like average daily rate, what are we seeing there? How is sort of this equalizing in supply and demand impacting what we're seeing there?
Yeah, so rates were up 10% in March versus last year. So
Okay.
on the surface, that's a bit alarming and great for hosts, a bit alarming for someone trying to book summer travel right now. But it is sort of the rate of increase is decreasing. It was 18% growth in January, 13% in February. So we're sort of evening out. The rest of the spring, we're expecting rates to go up about 11%. And as we look out to the summer, rates are trending up about 6%. So overall, healthy increase in rates given and what's happening to underlying demand, what's happening to labor costs for hosts and cleaning their properties. Like it seems to be pretty normal, healthy rate increases. We're also seeing and cleaning fees go up. That was some press we got in the Wall Street Journal, I think it was last week, on sort of rising cleaning fees.
Right.
And similar rate of increase there. So overall cleaning fees were up about 6%. Last year, they're up 10%, which was the sort of highest rate of increase we'd seen. But with the sort of extra cleaning that needed to go into short-term rentals last year with COVID protocols, like I think that can be expected.
Gotcha. Yeah, those always those controversial cleaning fees, right?
Yeah.
You'll love them, hate them, depending on what side you're on of the fence. Yeah, and I think, of course, we also saw some new regulations rolled out by Airbnb, right? Sort of more in favor of guests. Saw some interesting comments there. So, hey, if you have an opinion about it, put a comment there with the link. But yeah, tell me what you think.
Definitely a hot topic. Airbnb pulled back after the response from hosts. So I think it's great that they're listening to the hosts and responding to a bit of backlash there. But overall, what concerns me more is just overall regulation in the industry. So we've seen lots of new laws being implemented over the past, either proposed or implemented over the past few months. It was actually a really big topic at VRMA, the Vacation Rental Managers Association conference. Me and my colleague, Alex Haler, were at last week in Chicago. And one of the big takeaways and big headlines there was they raised over $400,000 for to put into advocacy for the industry.
Oh,
and
awesome.
It's a neat spot. It's where us at AirDNA and me personally try to help out a lot is putting data behind the arguments. And that's where we can sort of put some real numbers to what's going on out there and what are the real positive impacts that short-term rentals have in the community and bringing money to small businesses throughout the country.
Yeah, and as you say, right, demand isn't going anywhere. So folks are always going to want to have these sort of alternative lodging options. So it's really, I've been really impressed. And of course, VRMA certainly a great forum for it, just with sort of the amount of advocacy that is happening in the industry and folks, willing to sort of meet on both sides of the fence and talk about it and find out the best solution, right? Sort of great to see, residents come together with hosts, come together with tourists to really figure it out. So love that. So yeah, so VRMA, tell me more. So you're obviously back on the travel junket, and let's talk a little bit about what our summer plans are. But yeah, how many people were at VRMA? Was it a big event this year?
I think there was over 800 people. It was much bigger than I was expecting. And the exhibit hall was full. There were lots of positive vibes around where the industry is going, around the professionalization of the industry, all the tools now that vendors are bringing to hosts and managers out there to really help them compete, help them sort of react to changing demand trends. One of the best panels I listened in on was managed by our friend Heather Richer with Richer Logic on revenue management. And it was just great to see and a few of the vendors out there talking about the new pricing tools they have. A lot of those features We've got in our smart rates tool for AirDNA subscribers, but it's really leveling up the professionalization that our industry has.
I love it. Yeah, giving us a leg up on the competition, so to speak, which is what we're here for. I love that. Well, I know you're super busy this summer. There's lots of opportunities to hear Jamie speak and also to visit with AirDNA folks. So just kind of like a few that we're attending. We have Skift, Future of Lodging in NYC. Speaking of NYC, so we'll be giving them a boost to their demand, obviously. In BC, NYC, BC, TTRA here this summer, spring, and then of course the Scale Rentals Show in Barcelona, which is one of our other headquarters, and then the Short-Term Rental Forum in Austin. So there's just a few opportunities for you guys to hear from Jamie and also get to meet with some AirDNA folks. And we'll put those in the link below. I like to point when I'm doing these things. But yeah, I think Jamie, what do you think? Are we at a wrap? I know, guys, we promised you Demi, our new COO, and we didn't bring her. So next time we're going to get Demi on. We'll just, we want to give her some prep, we want to make sure it's a warm space for her.
Yeah, we didn't want to bring her in with the headline being occupancy declining. So hopefully we'll find a more positive headline for her to reveal next month and report on. And April heading into summer is going to be amazing for the industry, and demand on the books is shaping up to be another record summer. So even if occupancy does fall a bit more, as I said, it's for the right reasons.
I love that. I'm so excited to see what happens next. And thank you so much for your time, Jamie. We'll see you soon.
See you guys on the road.
Bye.